Now in this video, I'm going to keep it real with you guys and share with you 7 different high yielding ETFs, maybe even ultra high yielding ETFs that are yielding a ton beyond their even normal yield because the market has been so beat up as of recently. Now during market crashes or downturns, whether it's long-term or short-term, you're going to find accidental high yielders, meaning that certain stocks or ETFs that yield, let's say, a decent amount or a small amount might for a short time frame yield a massive amount because the stock is much cheaper, raising your potential yield on cost. Now to be clear, every single one of these ETFs that we're going to go through in today's video, I would consider them a bit more risky. I personally would never build my core portfolio with any of these names specifically, although I do hold every single one of these ETFs as sort of satellite positions, and for good or bad, I personally like them. Now, like I said, because the market's been beat up, these are yielding very, very high. So if you want to see which ones I'm talking about, then make sure to drop a like down below, subscribe, and let's get right into the first one. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now the first ETF that's yielding a ton because the price of this ETF has been beat up like crazy is FEPI, the Rex Fang and Innovation Equity Premium Income ETF, which before the drop, the distribution rate was around 25%. Right now, it's probably closer to 30%. Now, this ETF has always been a bit risky because it buys into big tech names, writes cover calls in those names. Now, I find this a bit risky because big tech names are generally a little bit higher beta than some of the boring defensive names like the names in SCHD, for example. Now, because this ETF does, of course, own big tech, write cover calls, there is an enhanced income potential from it. But again, because the underlying is going to be in big tech names, especially during the most recent downturn, names like Tesla, names like Microsoft, I mean, all these names for the most part have not been spared. Now, that being said, FEPI's holdings are names that probably will recover someday, at least I'm sure hoping so. But because of the cover call overlay, this ETF is probably going to struggle a little bit. Again, I hope I'm wrong. I hope it recovers as fast as possible because, side note, I own a decent amount of FEPI. Now, because FEPI is trading well under $40 per share as of right now and has been paying out around $1 or so per share per month, I mean, this is giving investors, like I said, a 25, a 30, a 35% yield. I'll have to say that I have my eyes on this one. I don't think I've added any more FEPI during the most recent drop, but I am watching it very, very closely. This could potentially be a bit riskier of an opportunity, but one that I have my eyes on. Another ETF that normally yields a ton, but as of right now, the yield on cost could be massive, is JEPQ, or the JP Morgan Nasdaq Equity Premium Income ETF. One of my favorites. I've talked about JEPQ about a zillion times on this channel. Now, JEPQ's 30-day SEC yield is around 10-12% more or less based off of the most recent dividend payouts. But again, because this ETF is down significantly from the all-time highs, these payouts, if they stay pretty consistent, which hopefully they will at least, if not even go up because of the volatility, you could potentially get a yield on cost of say 10%, 15%, or even higher, depending on what happens next with the price. Now, this ETF is sitting more or less right on my average cost per share, so it is tempting to grab some more shares as of right now. But to be honest, as you guys know, I've been stacking some of the higher quality names, some of the dividend growth names like VIG, SCHD, etc. All to say that JEPQ is definitely on my watch list. If this one dips any lower, I'm going to have to gobble up some more income. Another ultra high yielder that's now possibly even more ultra high yield is AIPI, or the Rex AI Equity Premium Income ETF. This ETF has been one that I've nibbled on here and there in my portfolios over the last year or so, but honestly, I always knew it was a bit riskier because it holds on to AI stocks, which have the potential to grow very, very quickly, but also have the potential to drop a bit faster, in my opinion. Now, some of these AI stocks are names like Nvidia, like Palantir, like ARM. I mean, really high quality names that I hope do very, very well long term. But because of the most recent drops in the market, this ETF is down a ton from its all-time high. But just like FEPI, if it still keeps paying, let's say $1.20, $1.40, anything in that range, this ETF that has a 34% distribution rate, the yield on cost for this one could be upwards of 40+%. Again, a bit riskier of a name. I personally haven't grabbed any yet for my portfolio as of yet, but it's on my watch list. Now, as far as ETFs I have been grabbing more of, I've been dollar cost averaging down, which feels amazing because for so long I have not been able to dollar cost average down. I've been grabbing more of the NEO's S&P 500 high income ETF and of course the Nasdaq version also. Now, both these ETFs have been on my watch list and my shopping list basically for the last several months. And this is because I personally want to gain more S&P 500 exposure and, you guys guessed it, more Nasdaq 100 exposure. But I want to do so through a high income strategy, which both these ETFs have achieved so far. And speaking of income, QQQI is probably yielding somewhere of around a 16, 17, 18% yield on cost, just based off of the previous distributions. Again, I'm not saying they're for sure going to keep paying like they have been paying, but I'm sure hoping so. Now, I already own a lot of both these ETFs, but because I'm so into what they have to offer, the strategies match almost perfectly what I'm looking for as a long-term investor. That being seeking high monthly income in a tax-efficient manner, but with the potential for capital appreciation and rising markets. Now, even if we don't see a rising market anytime soon, I still am comfortable with having S&P 500 and NASDAQ 100 exposure through both these different names. And as long as they keep paying somewhat of what they've been paying historically, I would be absolutely ecstatic. Now, a few more names that are yielding extremely high because of the most recent drop. GPIQ, the Goldman Sachs NASDAQ 100 Core Premium Income ETF. This ETF normally yields, I want to say maybe 10 or 11%. Right now, the yield on cost has got to be closer to 14% if my math is correct. Now, this ETF also offers NASDAQ 100 exposure, but through an income strategy. They sell covered calls dynamically, which means that if and when, I really hope so soon, the market recovers very, very sharply, this ETF should recover quite quickly along with the NASDAQ 100, at least I'm hoping so. All to say that this ETF has also been on my shopping list. I have actually added some more of this one, I think a day or so ago. And definitely one to look into if, of course, you want some NASDAQ 100 exposure through an income-oriented strategy. Now, last but not least, I have not added more of this one as of yet. It's very, very tempting because it's dropped so much in price. I'm talking about SPYT, the Defiance S&P 500 Income Target ETF. Now, this ETF I've been buying a little bit of ever since it came out. I think altogether I might have 300 or 400 shares, so not a massive position. But this ETF has a target to pay investors around 20% per year using the S&P 500, using options paid out monthly. Now, as of filming this video, this ETF is trading at $15.58 per share, down from around $20 per share, so it's down around 20% more or less from the all-time highs. Now, of course, the total return is much better than that. This ETF does pay out a massive distribution, and again, if it keeps paying out the same distributions, which are somewhere around, 30, 34 cents per share per month, I mean, you're looking at a massive amount of income potential. All to say that there is risk with this strategy. I mean, there's risk with anything in the markets. I have not dived into this one yet. I have not opened my wallet for this one yet, but I've been tempted just to add some very cheap income generation. But let me know what you guys think. So there we have it, guys. Those are 7 different high yield or even now ultra high yielding ETFs that I own as of right now, but do want to add more of, at least some more than less, in my portfolio as of soon. Now, during market crashes or corrections, I personally use a lot of my cash balance into super high quality names, sort of tried and true foundational names like SCHD, or names like VIG or even Devo. Super low beta, somewhat defensive, diversified names, and then with any extra cash left over, I normally put it in treasuries and or buy some ultra high yielders like we're talking about. But before I go, I do have one last question for you guys down below. Out of all the high yield or ultra high yielding ETFs as of right now, what are some ones I definitely should look into ASAP? Drop the ticker symbols in my comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.